95% of traders lose money. You've heard this everywhere. You've heard it every single day of your life. And people always tell you it's because people do not know how to control their emotions, their fear, and their greed. But what if I told you that's actually not the case, and that's not the reason why 95% of traders are losing money when day trading? The real reason you are losing money and they are losing money is structural. It's not about your mindset or their mindset. And in this video, I'm going to show you the 4 actual reasons why traders lose money. And once I actually show you these 4 reasons, you're not going to be able to unsee them. So without further ado, let's get into the video. Quick context before we start. This is day 1 of a 20-day series where I teach you exactly how to trade and how to become a professional trader. Not the type of traders that you see online flexing cars and all that stuff. A real professional trader. In this video for today is the reason why people lose money day trading. And once you understand these reasons, we can move on to day 2. But for now, this is very important and you need to pay attention. Because if you don't pay attention, what's going to happen is you're going to keep buying signals and courses that are like $4,000 or $5,000 when this is free, and different indicators that just don't work, and you're going to keep losing money in the market. So make sure you stick around for this. So reason number 1, trading is a zero-sum game. What this means that every single time you're trading, there's somebody trading against you. And you don't always know who that person is who's trading against you. And 90% of the time, it's not going to be another retail trader like you or me. It's going to be some hedge fund, some bank manager, some crazy firm that has a lot of money that wants to see you lose. Let me put a number on this. Citadel Securities, they handle over 35% of all retail order flow. They see your order before it even hits the exchange. Also, the Renaissance Technology Medallion Fund has returned over 66% per year for the last 30 years. These are the people that are on the other side of your trades. Every time you hit buy, they hit sell. So when you're taking a position based on an RSI crossover strategy that you saw on TikTok, who do you think is on the other side of that strategy? Who has the better information and the faster execution? And most importantly, the deeper pockets. I promise you, it's not that guy on TikTok and it's not that guy on Reddit. The markets is not a casino. In a casino, they have a small mathematical edge, which means that you can still win occasionally. The markets is a casino where every single other player is also trying to take your money. And most of them are much smarter than you and much faster than you. Now, this isn't just to scare you. This is to recalibrate your default assumptions. Your default assumptions should not be, I have an edge. It should be, I need to prove I have an edge before I start risking real capital and size up. Reason number 2, every single indicator that you've seen on YouTube is already priced in. From Head and Shoulders, MACD, RSI, stochastic, Bollinger Bands, pin bar at the support, everything has been priced in already. These are not edges, they are public knowledge. And they've been public for the last 40 to 50 years. Every single quant fund, every single algorithm, every single prop firm has already tested every single variation of those indicators. The reality is, if there was a free edge in buy when the RSI crossover hits 30, everybody would be making money right now. So here's the rule. If the edge is publicly viewed by every single trader in the world and has over 10 million views on TikTok, YouTube, Facebook, whatever, it's not an edge. It's not going to work for you. Now, does this mean that these tools are useless? No, they can be very useful if you're combining it with other things as well. For example, the RSI isn't going to tell you what's going to happen. It tells you what's already happened in the market. The real edge lives in a place that's harder to access, harder to learn, harder to compute. It's volume profile. It's footprint data, it's order flow, it's market microstructure. That's going to be section 2 and 3 of this course. That's going to be where you're actually going to learn exactly how to trade properly. And that's where most of the value is going to be for the next 20 days. So if the strategy you're trading can be a tweet, then it's not a real strategy. It's just a coincidence. Reason number 3, your chart is hiding the most important information. Look at a candlestick chart, for example. All it really tells you is the high, the low, the close, and the open. That's it. What you don't see, what's literally not on your screen, is who traded, how much did they trade, was it an aggressive buyer or a passive seller, whether the volume was concentrated at the top of a candle or at the low of a candle, whether a 500 lot order pretty much absorbed everything and the price didn't move an inch. Professional traders see all that. It's called order flow. It's inside of every single candle when you trade. If you trade without it, you're pretty much trading blind. It's like playing chess when you can only see your own pieces. Quick example, and we'll go over this on section 3. Imagine a green candle that closes near its high. To you, that looks bullish. Someone watching the footprint data, the exact same candle might show an enormous seller being absorbed by one buyer. So completely opposite interpretation on the same exact candle. And I guarantee the person who is only looking at open, high, low, close is going to lose. This is reason number 3 that you're losing. You're making decisions in incomplete data and you don't even know that. And if you're a new trader, then it's honestly better off that you learn this from the start and not have to go through the 2 years of growing pains that I did when I first started trading 8 years ago. And the final reason, number 4, you don't track what you don't know. If you don't write down your trades after they happen, then you don't know what's actually happening. And you don't know if you're any good. Think about your last 10 trades. Don't look anything up, just from memory. How much did you make on your biggest winner? How much did you lose on your worst loser? And are you up or down at the end of those 10 trades? If you think about it more than just 2 seconds, then that's a problem. And it's a much bigger problem than it actually sounds. Here's why. Imagine 2 traders. The first trader made $500 last month. And the second trader also made $500 last month. That's the same, right? Look at their journals. The first trader risked $50 every single trade and was up every single week. The second trader risked $2,000 on one YOLO play and it happened to work. And then lost the majority of his other trades. The same dollar amount, completely different traders. One has a business, the other one is gambling, trying to gamble in the market, which you should never do. It's only a matter of time until the second trader loses all his money and then goes back to his regular job. So it's very important for you to keep a journal and keep track of all your trades, all your wins, all your losses. Make sure you understand exactly why am I taking this trade at this time? What did I think about during this trade? And then why did I close the trade? If it hit your stop loss or take profit, and then just analyze that so you know exactly what's happening with that. So 4 structural reasons why 95% of retail traders lose. Number 1, you're trading against people who are faster, smarter, and way more resourced than you. Number 2, you are trading with indicators that's already been accounted for in the market and have no edge. The RSI, the MACD, Bollinger Band statistics, all that bullshit, it's never going to work by itself. Number 3, you're not trading with order flow, right? You actually go into the price completely blind is very important. And platforms like Trading, for example, don't show you that. They don't show you order flow. That's why I specifically use ChartLabs. So if you want to check out ChartLabs, chartlabs.co. And reason number 4, guys, is you guys are not keeping a journal. You don't know what's happening with your trades. You're not writing down every single win, every single losses, why this won, why this loss, what was I thinking at this time? Very important. Notice that none of these are controlling your emotions. Your emotions are downstream. Fix the structure first, then we can work on emotions. Over the next 19 days, we're going to fix every single one of these problems. Section 1, the next 4 videos, will sharpen your price action so you stop trading bad setups. Section 2 brings in volume. I'm going to teach you all about volume. You're going to start reading order flow like a pro. And then finally, section number 4 is going to take everything, put it together so you know exactly how to formulate your own strategy and how to start winning in the markets. So tomorrow, day 2, the only 4 patterns that actually matter, I'm going to teach you. So subscribe, don't miss it. I'll see you tomorrow.